All right, everybody, thank you so much for joining us for another Lender Q&A call. My name is John Newford with New Finance, and if you're not familiar with what we do, we are a private money lender and broker, and we run a training program to teach people how to niche their business out into private money loan brokering. So today we're doing a Lender Q&A call with Mr. Ethan Bubble. It's Bubble, right?
No, it's Bubel. That's
Bubel. I'm
okay.
so sorry. I'm sorry, brother. Bubel. Ethan
That's okay.
Bubel. You probably get that every once in a while, man. I'm sorry about that. Ethan's with Capital Fund One. He's one of my favorite private money lenders in a few select states because he's very aggressive in these states and he funds a ton of business out of those states. So, Ethan, thank you so much for being on the call with us, brother.
Yeah, absolutely. And, some news, if you guys haven't heard from us before, we are in 5 states for these short-term loans, Texas, Colorado, Arizona, Tennessee, and Georgia. But coming in 2025, we're going to be adding North Carolina. It is confirmed coming soon. Probably a few months, but, at any point in the year, we're going to be doing that. And then we have our eyes set on Alabama. So that's
Nice.
kind of where we're covering right now. And I don't know exactly, if you want to just ask the questions, John, or if you want me to
Yeah.
talk about any more stuff.
Yeah, so a lot of people, are on the residential side, inventory's low, and the buyer market has actually shrinked quite a bit as well. So it seems like everybody spent their money already buying on these higher interest rates that people can afford it, and now there's just fewer buyers than ever before as well. So a lot of people are migrating to private money, doing investment property loans. Non-QM is what traditional mortgage brokers understand this business to be, but obviously it's a lot more than just non-QM, right? So why don't you tell us a little bit
Yeah.
about how you got into the industry, just private money, commercial lending, and then we'll have you do a quick rundown on what Capital Fund One's box is, and we'll take people to the
Yeah.
website, and then we'll run through that Excel worksheet, make sure we're perfectly lined out so people know how to place loans with you, and we'll call it a day.
Yep.
Cool. So tell us
Awesome.
about how
Yeah. I
you
mean, I
got in,
guess,
brother.
yeah, just starting out, man, I graduated school and got right into the mortgages, the primary home, conventional loans. Did that for about a year. That was in 2020, right? So interest rates went all the way down to 2%. Once interest rates went back up, there wasn't as much of a need for everyone to refinance, right? I started learning about private money, investment loans. It's great to get a family a house and a mortgage, but once you get them a house and a mortgage, that's it, right? They're in the house and that's their forever home. So, kind of starting to evolve after that, learning about really the people that make moves, right? Build the houses, fix the houses, find the deals. That's what I was interested in the most. And private money and where I work now, Capital Fund One, that's their specialty. So, moving from the primary mortgage world to the investment world wasn't hard because it's so interesting. These people are finding creative ways to acquire the properties. They're making buttloads of money because they're specialized and they know the rules. They know how to get the money, use the money, and they know how to find the deal and make the money selling the properties. That's what got me in, right? John was kind of, oh, there's this whole world of learning how to actually do all this. And at that point, it's a product now that is so specialized. So it wasn't really hard for, at this point to sell it either, right? To let everybody know, hey, you can get private loans. It's not a scam. It's not scary. It's literally the same thing, just a little bit different, right? Um, and now that we're here, everybody's kind of utilizing the creative ways of getting these deals done because it's the same, maybe it's even cheaper, right? It's easier. Sometimes it's even cheaper, and almost every time it's faster. So at the end of the day, it's kind of overtaking the other product and yeah, that's kind
Yep.
of how I got here.
Absolutely. Yeah, and that's one thing that people selling primary residence loans, they might not know, or maybe they do know, but they're afraid to get into the industry. The cool thing about private money lending is we only lend to investors. So where you might be getting, a deal on a primary residence loan, someone buys a new primary, sells or refinances once every 5 to 9 years, right? That's your deal flow with that borrower. with investors, we have people getting loans on 3 to 5 properties a year, fix and flipping. Some people do more. So the repeat business in this side of mortgage lending is, so much greater than, what you're going to see with a primary residence. And on top of that, you can do multiple states without licensing requirements. So many people don't know. It's like, yeah, Georgia, Texas, Colorado, no additional licensing, no additional continued education. It's crazy. So just there's so
Yep.
much more opportunity on this side of the space that people just don't know about or just kind of ignorant of. And I think the primary mortgage space, primary brokers, they want us to be ignorant of the opportunity in private money. You don't have to hang your license up at a brokerage shop to broker these loans. So yeah, I mean, those are all
Absolutely.
all good points that you made. The investor space, the movers and shakers, that's where you're going to get more business. And, you get to see how the economy actually works in mortgage lending. We're in a renter's economy today, right? So,
Yeah,
a lot of people are like, there's fewer buyers because it's just cheaper to be a renter than it is to be a buyer now. So that means there's more investors going and buying up these properties instead of the primary residences. So
absolutely.
tell us a little bit about Capital Fund One. You hit in a little bit about what states that you do lend in, or you're going to be lending in. So tell us, what states do you actually lend in today, and
Yep.
give us kind of I don't know, a 30-second elevator pitch on exactly what you guys do.
Yeah, so we're geared to be specialized in the short-term loans. Everything we do is 1 to 2 year loans, and the reason we're so special is because we do it with no credit check, no financial check, and no appraisal at all. We have a team of full in-house underwriters and staff that evaluate the deal. They tell us what they think of the property and the project. That's really our advantage is doing everything in-house, servicing the loan. It's our private money, it's our money. We make our own rules. So really, we can close in 48 hours because we're not, backed by banks and we don't require all this stuff. No seasoning, no financial checks. So really these people just bring the deal to us and all we're looking at is do we like the house or do we like the project? Do we like the location? And does it make sense?
Right.
And that's our competitive advantage, getting these people closed out in less than a week, not having them go through all these hoops, and really just providing them the funds to acquire the property and build it or acquire it and fix it, right? And the best part about our loan is no prepayment penalties, very low fees because we're geared towards the people that want to repeat this, right? Replicate it, do more of it. And we don't want to penalize borrowers, right? We want to be the cheapest, fastest option so you guys can then sell it, do it again, right? Or refinance it, do it again.
Yep. Give me
And
one sec.
that's where we're at.
Well,
Yeah,
sorry for walking out on you. Like I said, I got
that's
the
okay.
kids coming and breaking in every once in a while. So I got a 5-year-old, a 3.5-year-old, and a newborn downstairs.
Oh man, that sounds
Yep.
like a whole life to go, baby.
Hands are full. Hands are full. Cool. So sorry for that pause, guys. This, if you don't know already, this is a live lender Q&A session that we hold every single week with our lenders. So if you sign up for our community, you'll see that Anraj popped into the picture and he popped down. That's because towards the end of this call, we open it up to a live Q&A session for all of our brokers who decide to attend these meetings. Um, Ethan, thank you so much for giving us that box. Um, Explain to us real quick why someone would want a 12-month short-term loan. Because a lot of
Yeah.
people don't know, like that sounds kind of predatory, right? Because we're all kind of scarred from the 2008 financial crisis, all these
Yeah.
fraudulent loans taking place, ninja loans, all this crazy stuff, right? So explain why someone would want a 12-month interest-only loan for us and why they would end up using Capital Fund One.
Yeah, absolutely. So, I mean, really, if you're looking to do investment real estate, there's no better way to actually acquire properties than short-term loans because, anything that's not a short-term loan will always have red tape or might always take a little longer or might always require you to put down a little more or fund the rehab yourself. So these short-term loans, they're technically, rehab loans or construction loans. Banks and lenders, they don't give out loans to fix things, build things on the short term. Like it's almost like those products don't exist unless they're a rehab or construction type of lender. So we're kind of that middle ground of basically both, right? And it'd be great if you could get a short-term loan that's not interest only, but of course, they don't really exist. No lender's really going to want to actually take all that risk for something without requiring that. So you'd rather not pay interest only, but the advantage there is you're able to acquire that short-term loan to then do the deal easier, do it faster, and once again, none of these have prepayment penalties. So if you have a house that you want to fix up and sell, nobody ever thinks about it taking 12 months, right? Everyone in their head is, oh, I fix it up, I sell it. Should only take 3, 4, 5, 6. Worst case, maybe it takes 12 months. And really, at the end of the day, worst case scenario, every loan that Capital Fund has an automatic 6-month extension built in. So, 12-month loan, something goes wrong, we don't just take the house, right? We don't just right at 12 months on the dot, slam it down and say, you're done. We're here to work with our borrowers because, once again, we'd rather see you succeed, sell it or refi it, help you figure it out so you can then do it again. That's why the 6-month extension's built in and why you can tell right away, like with the guidelines we have and the things we build into the loan, it's not predatory, right? It's set up for you to succeed. And then if it's worst case, right, that's when we get on the phones and we figure out with them directly, hey, how can we fix this? How can we help you? Or is it just dead? Do we need to come in? And that's where we're not at the end of the day just not communicating with these people. We're from day one talking to them all day long, draws, rehab, construction. We're in the deal just as much as they're in the deal.
Right,
Um, so that's where it's like if it goes wrong, we both kind of lose. And
right,
so it's better that we just both win and that we all work together. And that's kind of
right,
it's hard to get that out of people's head that don't know about this industry. But, once you come to classes like this, once you kind of talk to people, don't jump in right away. Hear it for yourself from guys like John and guys like me and shake some hands and hear the stories of like how it really works and people telling you they've done it. Because, the success stories obviously tell the truth, right?
right,
Hey, this isn't, a predatory product. It's
right,
actually helpful.
right, right. Yeah, and you guys heard it. Ethan's a balance sheet lender, and most fix and flip rehab lenders, they're balance sheet lenders. The last thing a balance sheet lender would want is to have to foreclose on a property that is mid-construction because they aren't real estate developers. They don't want to be fix and flippers. And if a property's mid-construction, actually what just happened is the value actually went down because they're mid-construction, right? So they stripped down the drywall and everything. Now you have a truly distressed asset where it may have been distressed. Now it's like completely,
Right.
completely distressed, right? It's skin and bones. So that's the last thing a construction lender would want to do. So you mentioned your guidelines. Let's talk a little bit about the guidelines so any of our brokers in our community know how to place loans with you. So tell us a little bit about your LTV requirements and experience requirements.
Yeah.
Where do you sit on LTV to purchase? How much you're covering on the rehab, FICO score requirements, as well as the experience requirements to hit certain tier levels with you.
Yeah, so yeah, I mean, really a little different than most lenders with kind of how we're loaning to people. A lot of people do based on the finished value. We of course look at the finished value that we think it's going to be worth, but we're more so loaning based on just the cost. So what does it cost to purchase it, or what did you purchase it for, and what does it cost to build it or fix it? Just the total cost of everything. Obviously, we don't count taxes on the property or insurance on the property or legal fees, as cost. We're just talking about price on the home, and then cost to fix it or build it. Our max loan is 85% of the total cost. So it is a little confusing. The more rehab you have to do or the more construction you have to do, technically the more money you're putting down because that's just kind of increasing the cost of the project. And we're going to always cover 100% of rehab or construction. So to dumb it down, guys, 80 to 85% of the cost is really where we loan on these projects. And when you do the math, it's usually 15 to 20% down on the purchase price. Now, if the budget's super high and the purchase price is low, the percentage down might look like more, but obviously the percentage of cost that we're loaning to is still the same.
Right.
Um,
Right.
so that's maybe a little different than most. And then, of course, to qualify for these loans, we love to see experience, but on your typical fix and flip, it's not absolutely required. We're more so looking at bigger projects, construction, anything ground up or development or commercial. You probably have to have done it at least once before.
Right.
Now,
So
single family fix and flip,
first time fix and flippers are cool with
yep,
Ethan. That's fantastic.
absolutely.
That's fantastic. I'm assuming you'd require GC though, however, to partner up on the quote but they wouldn't have to be a guarantor, right?
Nope, they don't have to be a guarantor. And who knows, maybe it's a killer deal and they just got to put 20 grand in and it's easy enough and we won't require a GC because they're just going to paint, fix the cabinets, change some stuff. Now, if you're doing electrical, if you're doing roof, if you're doing foundation and you've never done it before, yeah, we'll want to see that the GC has a bid or maybe signing off on the budget.
Mhm.
Um, but that'll help us get around that. If it's really their first time, they should probably always kind of get a bid from somebody because otherwise, what are you doing? How do you know what you're doing if you haven't done it before? So yeah, best thing you guys can do is always have a GC or a contractor give them the budget unless they have flips under their belt.
Right. Fantastic. So I remember that one thing that makes you guys unique is you don't do appraisals. Is that right?
Yeah, no appraisals and no FICO.
Right.
So the catch about that is, hey, if I don't even go to your house or your property, you have to provide me with some pretty good photos.
Hmm.
And they got to be current photos because, of course, if we're never going to go there, we got to make sure that there's no dead bodies or that the house isn't actually just burned down.
Right.
Um, we'll look at the listings, we'll look at the internet. If photos are from a year ago, we'll find out. If photos are from 4 months ago, we'll find out. They just got to be current. And that's simple enough, right? If you can just give me some pictures, tell me what you're going to do to the place, and tell me what you're buying it for, we're in business. We're going to go underwrite it in 24 hours and tell you what we think and how much money we can loan, and then close the next day if you
Yep.
have to close that fast.
Yep. And I can attest these guys are very quick. Most lenders want to see an appraisal. Most lenders on fix and flip want to see 650 to 680 FICO scores. So this is a very unique lender, a great place to drop loans on the fix and flips,
And
especially
I'll
if you
say
want it
one more
done quick.
thing. Yeah, sorry, John. I'll say one more thing because most people they don't know. Me compared to lenders that do credit check, that do appraisal, I'll just be honest with you guys. Sometimes they will give the borrowers a little bit more money, right? Maybe a little bit more aggressiveness because they did all of that, right? They checked all that stuff. So that's kind of something to look out for borrowers that are just sitting there saying, "Hey, I need the most money possible. I don't care about anything else." We're
Yeah.
maybe not the right fit for those people
Right.
because we're so fast, we're so cheap, we're so
Yeah, but
easy. I'm not going to give.
it's at the cost of speed to close because they're looking at the appraisal, because they're looking at credit. It's just more questions that pop up and more
Yep.
variables that slow the deal down. I mean, I can't
And
count how many deals I got an appraiser who's supposed to go appraise the property. They go and they do the inspection, but then they don't deliver the appraisal for 3 to 5 to 10 days sometimes. Maybe there's
yep.
circumstantial things like an earthquake or a storm, whatever. There's so many aspects that could end up stumbling your deal. Too many variables, right?
And
So,
then we charge 1%. So a lot of times people charge even 2 points and they're still checking credit or doing the
oh yeah.
appraisal. So,
Well, that's why
it's
they charge 2 points because there's more administrative costs. So
absolutely.
it just makes sense. And so 1 point is fantastic, especially for our community of brokers trying to place loans. If you're
Yep.
having to stack on top of a 2 point existing, it's like, well, that only leaves me 1 to 2 points max. If you're sitting
Yep.
with Ethan, well, you're at 2 to 3 points possibly, right? So it's a fantastic little pricing setup. So Ethan, if you don't mind, let's jump into the Excel worksheet. So,
Yeah.
everybody, if you haven't already joined our community, when you join up with our crew, you will get access to our Lender Buckets Excel sheet. So, in the Lender Buckets Excel sheet, we cover every kind of loan scenario that you might need to get funded. And we have about 3 to 7 lenders in each bucket, whether that's a fix and flip, a ground up, a 1 to 4 perm loan, a 5 plus, or commercial perm loan. We have SBA lenders in there. We have commercial bridge lenders. Each bucket has its own requirements, and it's a fantastic tool to actually placing these loans efficiently. A lot of people use like Scotsman's Guide and a couple of other, search tools. But those search tools, the lenders are always going to provide more liberal parameters to the search tool community so they can see more deals. So what you'll end up doing is you'll use the search tool and you'll get placed, you'll talk to a bunch of lenders and they're like, "Oh, that doesn't fit our box." Well, I thought I had a search tool. I put in the right parameters. Well, that's because they want to see more deals. They want to get more relationships. So they're always more liberal on their parameters. And the lenders pay to be at the top of the search list. So you search a lender and you're just going to get the ones who paid the most money with the most liberal parameters, and you're not really going to get the focused placement that you're going to get from like a real honed in and vetted Excel sheet or lender bucket list like us. So I'm going to share my screen right now, and and every week we go through the lender bucket list with our lenders to make sure we're up to date. And that's another problem with the lender search tools. They're not always up to date because lenders change their guidelines sometimes on a weekly basis. So you need to make sure that you're up to date, and most of those tools aren't. So you'll see several buckets here. We have Mr. Capital Ethan at Capital Fund One in our fix and flip and ground up bucket, but you'll see all these other buckets in line. So this is what you'll see. Ethan, let's go through this and make sure all of our guidelines are still intact, and we'll go from there. So first off, the main thing I want everybody to understand, if you're working with Capital Fund One, they only lend in these states. I harp on the idea of securitizing, getting a few nationwide lenders so you can cover any deal. However, when someone comes to me and they're like, "I need money tomorrow," I'm like, "Okay, what state is your deal located in?" Because if you want money fast, you can't use a nationwide fix and flip lender. You need to go regional. And that's where Capital Fund comes in here. They are a regional fix and flip lender, which they know the market a lot better than a nationwide lender, right? Because you can't keep track of all the markets. So they only lend in GA, Texas, Colorado, Arizona, and Tennessee right now. And it sounds like they're bringing in North Carolina and Alabama. And we have them here testing that area. So we've had this testing section for I think like a year and a half, maybe 2 years now. So
Yeah.
we've been talking to Ethan. We know what market they're testing. It sounds like it's coming to fruition. So that's great. Ethan, is all this contact information still on money for you?
Absolutely, that is accurate.
Great. When someone gets a deal, Ethan, what's the best way to send you a scenario? What do you like to see?
We like to see, the location, upfront address, and if it's not really easy to find on the map, you can maybe just send us something that's right next to it, right? So location, address, we can tell you if we're interested on the phone right away, basically, mostly based on that.
Right. And
So,
Ethan,
but
Ethan's one of those guys who answers quickly. Um, Another reason why we set up our systems, guys, is because when you hit up a lender from their website, 99% of the time you're going to get hooked up with an account executive that's inexperienced, because they want to fill that inexperienced AE's pipeline up. They want to get that guy experienced. So part of what we're doing here is we're making sure we're vesting account executives. Ethan's been with Capital Fund One for quite a while, and he knows the guidelines. So he answers quick. He knows the guidelines. Always answers his phone. Fantastic. Let's
and
see
just
here.
email it to us, just email it to us and call us, and we'll
Perfect.
get on it.
Money. Okay, so why does we always, we want to know why we should send you deals and your biggest hangups. So right now we have all these things. I-10, we didn't mention I-10 today. You do I-10s. So that's
Yep.
fantastic. No appraisal, no credit check. Land loans available. Can you tell me a little bit about your land loan guidelines? Because we do get those every once in a while.
Yeah, it's really not our favorite thing to do. The only time you're probably going to have luck with that is on single lot acquisitions or just, if it's already lots that are ready to go vertical on. If you're just buying a lot, we can give you 50%. If you just need to take some land down, we can do a 50% loan, close in a couple days if we like it and the value we agree with. Now, if you're trying to buy 10 acres, 20 acres, 30 acres, and it's just raw land and it's not developed, it's not zoned, it's not going to happen unless it's right in the middle of Dallas, Houston, Austin, major cities. Um, so really, don't think that we can really be aggressive on this. Just tell us where it is and the dollar amount and kind of how big the piece of land is. We're probably not going to want to do many of them unless they're lots ready to be built on. That's where you're having more luck because we can actually do something with those.
Right. Yeah, remember guys, most lenders on this side, they're looking for upside potential and an exit strategy. And if you have raw land, that means, we aren't shovel ready. We don't have any upside. The loan will probably just mature most likely because you got to go get permits. You got to get it shovel ready. You got to get it developed before you can go ground up. So there's no real upside, no real exit strategy. And most lenders won't lend on the land alone. Normally, they want to see land act. I will lend on it as long as I am part of the vertical. So I'm going to give you a
Yeah.
loan for the land and the vertical. So it's good to hear that you'll at least lend on the land. That's a niche product that most lenders don't provide.
Yep.
Biggest hangups, obviously, I said earlier, your biggest hangup is probably your restricted, footprint in the nation, but
Yep.
that's okay. It's good to hear you're expanding. Your loan amounts, are you still at 50,000 up to 300 million or 30 million?
30. Yeah, 50,000. We've never loaned 30 million. We're capable of it. We've loaned 24 million a couple times. So, yeah, we can absolutely do it if we love it. But those are our premier deals. If you're going to get 20 plus $1 million from us, we got to absolutely love the deal. Our easier product is kind of anything from 50,000 to $1 million is we have no problem doing it all the time. Anything over a couple $1 million, once again, you got to know what you're doing. You got to have experience for
Right,
us to really loan
absolutely.
that much.
And you're still 12 to 24 month interest only. One point here, no YSP. YSP isn't really a thing normally on bridge loans, so that's okay. It looks like you will table fund if someone has a proven track record with you. So if you guys aren't familiar with table funding, it just means if you're a broker, you can essentially white label Ethan's money as your own. And they're saying with the proven track record. So it's kind of like you are using them as like a warehouse line in a way. Because they trust you. So it's like, okay, they trust you enough to underwrite enough deals, bring enough business. Well, go ahead and just call our money your own, and you can be an extension of us in a way. So that's wonderful. 1 to 4 investments, multifamily mixed use. I remember you do a little bit of straight up commercial though, right?
Yeah, right now we'll actually consider retail and like a hotel type of deal. Obviously, we really don't like warehouse. That's probably going to be tough to do. Any kind of industrial or warehouse type of stuff is probably a no. But
Okay,
retail,
that's
hotels, and offices are a little hit or miss, but retail is real good right now. And hotels, if they're cash flowing or if income approach makes sense, we'll do
sure,
it.
sure. Obviously, everybody does purchase and refinance. They're doing rehabs, bridge without rehab. So you'll get somebody who maybe they just need money right away. Property's already stabilized. It looks good. They just need a bridge loan to cover the next purchase of their next rehab. You'll do that.
Yeah. Now you might have to put a little more money down if you're not going to improve the property at all, right?
Yep.
That's where it's a little different, but absolutely we'll just help you buy it and
Fantastic.
you can figure it out later.
Ground up, recourse, entity required, no entity. Most lenders want to see an entity in private money because they don't want to get caught up in TILA RESPA regulations, caught up with, I'm dealing with a personal borrower. They want to see that it's a true private money transaction, a true business purpose loan, which is why they require entity. And in your case, you're cool without an entity, so that speeds things up. Borrowers don't have to scramble to create an entity. So that's great.
Absolutely.
No appraisal required. I'd say that's my favorite guideline for you guys. That will make your loans go so much quicker. Appraisal reassignment. So you will take a reassignment as well. So that's good news. So that's if a deal fell out with one lender, hey, I got an appraisal. They said no on my deal. Can I just send you the appraisal? That way you expedite the process. It makes you more comfortable for the deal too, if you do actually have an appraisal, right?
Most of the time we use those for the photos too.
Right.
Obviously, if it's a recent appraisal, you don't have to go take photos yourself. We can just use that
Right.
instead.
Speed to close, again, that's probably the best thing here, 24 to 48 hours. That's fantastic. We already went over your LTV, so you'll go up to around 85 to 90% on purchase, assuming the loan to cost is good, which I'm going to update here to 85 because that's what you mentioned.
Yep.
If you
Yep.
guys want to learn how to calculate loan to cost, I do have a video on calculating loan to cost. So just go through my YouTube channel. Maybe I'll put it in a link below. You guys can see that. Everything looks good here. I just put D paper borrowers because no credit. I mean, doesn't matter what kind of borrower we're working with here. And then finally, minimum experience. They need to have experience in the category or have a GC, right? So if
Yeah.
they're inexperienced, you got to have a GC. So we went over all this.
Yeah.
Now
This
let's
looks
check out your
great.
website really quick before we call it a day, brother, just so everybody knows what you look like online, so they're not going to the wrong Capital Fund one. You never know.
Yeah,
So
definitely. This is for sure it.
this is their website, guys. So this is what it looks like, and you already have a direct contact, so you don't need to like fill out an application or anything. But this is what it looks like, so you know you're talking to the right guys. Okay, very
Yeah, and
simple.
I'm running the team here as well. So, I have other people as well that are seasoned. One of them's been here for 4 years. So, if it's me busy or if it's us all working together, just know that we'll get it done either way.
It's
Get you
fantastic.
guys what you need.
It's fantastic. So what you guys just saw was our tool, our placement tool. So when my guys get a deal, they go straight to the bucket list and they can easily sift out which loan is a right fit. They look at the minimum loan amount. It's like, okay, obviously this one's not going to work. They look at the locations. Okay, this is a good fit. And then they give a call straight to our contact. So that's why we're using that tool, and it just makes your loan brokering a lot easier on the private money side. So let's look at any questions that we might have from our people on the call right now. So as I said earlier, guys, this is a live Q&A session. I do post these every once in a while on our social media, but if you're part of the community, you'll get access every single week. So it looks like Anraj asked a question, will you do 100 units?
Yes. Really don't have a unit max, just the max loan amount. So if the deal makes sense to us and we're not going to loan over 20 to 30 million, we'll consider it. Doesn't matter the amount of units.
Great. So no cap on units. What about multifamily units? So no cap.
No, no
Okay,
cap.
great.
It's the short-term loan, so that there's really no guideline. It's just, does it make sense to us? Do the values line up? Are you making a good buy? Are you doing a good project? And we're still loaning percentages of it, right? So borrower is always going to have some skin in the game. And so, yeah, just no limit at all, really.
That's a huge niche, you guys, because most nationwide fix and flip lenders cap you at 5 units or 9 units. Outside of that, they don't want to do rehabs. So this is a big deal. All right, another question from Anraj. Do you do mobile homes?
Mobile home, it has to be after 1976. So that's the threshold. I'm pretty sure that's common with most people. It's got to be at least double wide. And, we're not here to really do a bunch of unique stuff. So if it's mobile, hopefully there's comps and that it's actually in an area with similar properties,
Got it.
which
So
matters more to us.
you're going to hear that from most of our guys. There has to be sales comparatives. There has to be, or excuse me, comparables. There has to be a real exit strategy, like real activity and real desire for that property in that area. So mobile homes tend to be in more rural areas. So just remember, if you get a mobile home, most likely it's got to be right there in the city
Yeah.
to get enough sales comps.
And maybe we'll just ask for a little more money down, because it's just once again, we are loaning out private money, private investors' money. If it was your money, you'd want them loaning on the best properties of all time, right? But it doesn't work that way. So we do assess risk, and with those properties, there's always a little more, And so maybe we just ask for more money from the
Right
borrower
on.
to help us feel good
Cool.
about it.
One more question, and I think I already know the answer to this one. They want to know if you can do container homes.
No, right now I'm not gonna lie. It's kind of crazy. We can consider a mobile home, but a container home right now is just we're just not even gonna entertain it. I
Yeah.
had one that was a new build, I think a couple weeks ago in Austin. There's just nothing else like it nearby, and even if there was, I think we're just kind of out on
Right.
container homes right now.
Right. And what's the refinance strategy? Who's going to buy that property? Right
Yeah,
now, the conventional market, lenders, we don't have a guidelines on container homes. So if someone wants to buy that house as a primary, they can't just go get a mortgage. So it really limits the amount of buyers and the exit strategy. And let's just say the guy couldn't sell it. How is he going to get out of this note with Ethan? Well, he can't refinance because no lenders are really interested in that thing yet. So it's a cash
yeah.
deal. So if you got container homes, great cash flow strategy, probably, put a bunch of little tiny houses on a plot of land. It's probably similar to that, right? Even though it's more grounded, but it is what it is. Well,
But yeah,
Ethan,
we're out on that.
yep, I appreciate your time, brother. Thank you so
Yeah.
much. Any parting words for any of our brokers or borrowers that might be watching this video?
Yeah, I'll just say like we've said it a million times, like we are really that fast. So we're also that fast to tell you we can't do things. So even if you think we might not be able to do it, we're going to tell you the same day. You might as well just always let us know in those 5 states what's going on if you have deals. And because if we can do it, we're fast, easy, cheap, right? So it's almost like if we can do it, boom, you're good. But obviously, if we can't do it, we'll still tell you almost right away.
Yep,
So it's worth a shot no matter what.
absolutely. A lot of lenders are slow to respond. And in this world, speed is everything. So you better get a
Yeah,
response, whether it's a yes or a no.
absolutely.
Well, Ethan, thank you so much once again for hopping on one of our calls. Everybody, if you're part of the community, you're going to get this recording. You're also going to get that Excel sheet breakdown in the email. And if you want to join up, click the link below. Thank you so much again, Ethan. God bless you, brother. God bless everybody on this call. I'll talk to you guys soon.
Thanks, Sean. Thanks,
Yep.
guys.
See you, brother.